It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, May the 5th, 2016, wrapping up this incredible first week of the month of May. Hope you guys and gals have learned and earned right along with me here on this newsletter. We have another exciting video for you tonight. We're covering crude, S&P, gold, and of course, we can't forget about the euro. Markets are all trending lower this evening with crude, S&P, and euro all achieving short-term targets and looking for corrections, while gold appears to have some fire in its belly. It looks like it wants to reverse the trend to be a bull tomorrow. We'll wait and see. We have some very big news early in tomorrow's session. Tomorrow is non-farm Friday, so we'll be looking forward to see what that news brings and, of course, how that will impact the markets we'll be trading. Before we jump into charts tonight and plan tomorrow's trading session, I do want to remind you guys the only place to watch the full-length version of this video is on our trading blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, you can find a link in the description of the YouTube video, and that'll take you over here to our trading blog. It's the only place to watch the full-length version covering all four markets. While you're here watching the full-length version, don't forget to grab a free pass. Come out and join me in the trade room as a guest in the upper left-hand corner. In the lower left-hand corner, register as a member of our newsletter mailing list. Your name, your email address, and then check your inbox. I'm going to send you a verification email, and then I'll send you an email every evening when the nightly newsletter is ready to be watched. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. And over on the right-hand side, you can learn more about what it means to be a member. Join our free trial membership for our website at schooloftrade.com. You're going to learn more with me in 1 week on my trial than anywhere else on the interwebs. I can guarantee you that. And if you have any questions along the way, don't forget to use the live support on the right-hand side. I hope you guys had a great week with me. Wrapping up tomorrow, we got non-farm Friday. Friday, the 6th day of May. By the way, happy Cinco de Mayo, by the way, everybody out there. Hope you're celebrating. Friday, May 6th. Tomorrow is the first Friday of every 1 month, right? First Friday of May. And of course, that means we have the employment situation. We have the non-farm payroll number. Now, there are only a few of these news events that have long-lasting impacts in the markets. We've got non-farm payrolls, we have GDP, and we have, what's the last one? What do you think? We've got FOMC announcements, right? So there are a few of these really big news events that have long-term impacts, right, on the markets. One of them is tomorrow morning at 8:30 a.m. Eastern Time. Here's what you need to be aware of. In the Asian and London sessions, you are going to see substantially lower volume, so be careful in Asia and London before that news hits the wall at 8:30 tomorrow. Nobody wants to get caught on the wrong side of the market when that bad boy gets released tomorrow morning at 8:30 a.m. After the news comes out, you can expect one of two scenarios after the news comes out tomorrow. Scenario one, the market becomes violent, and I mean illiquid, blow your account, send you to the sidelines for a long, like get a second job to refund your account. It gets violent. Do not be foolish and try to step in front of a freight train that immediately comes out after that news number tomorrow. Okay, scenario one, it's violent. It is blow your account and put you in the negative, violent. The second scenario is where it just kind of sits there. And this happens every once in a while because analysts have known what the expectations were for that number tomorrow ever since Friday's ADP employment report. Ever since Wednesday's ADP employment report. So ever since Wednesday morning, all of the bean counters for all the big fund managers, all the pension managers, all the hedging corporations, they all know what's coming tomorrow or what should be coming. If the news comes out pretty much as expectations, it's usually going to sit because the market has already priced this information in. It's when the news comes out either much higher, much lower, or the prior was revised. I know. It's always a complicated business of trying to trade news. That's why I don't recommend it. Trade the reaction of the news. So it's either going to be really violent or really slow after that news comes out. Either way, I recommend you give it at least 10 minutes, if not 15 minutes. If it's really violent, then wait and see where our direction goes. Update your technical levels of support and resistance. Find that new direction and trade that new direction. So bottom line is overnight, be careful. It's going to be low volume. Leading into that news, sitting on hands tomorrow, and then again, 10 to 15 minutes after, wait for either the dust to settle after the volatility or for it to pick up and actually find a direction. My job tonight is going to be difficult because I'm going to do my best to give you the levels of support and resistance and overall trend and what I think is going to happen. But at the same time, though, all odds are right. All odds are off. All bets are off tomorrow morning after that news comes out at 8:30 a.m. I want you to promise me, if this market takes off, either up or down, do not fade that move. Do not try to buy into a rocket ship lower, okay? Do not try to sell into a runaway bull market tomorrow. I don't want to get an email saying, you said to sell the high. I said, I'm telling you right now, be careful. This is a big, big, big news event tomorrow. All right? If you don't know how to trade around these big news events, that should be your first clue that you need to get some knowledge about this stuff. So come out and join me. We'll be together tomorrow morning in our trade room, live in real time at 8 o'clock Eastern time. And we're going to do all this together. Just be careful if this market starts to run either higher or lower, okay? Use your brain tomorrow. Don't gamble with it if it's starting to get ridiculous, either higher or lower, okay? Now, hopefully, I've scared you a little bit into being careful tomorrow. I know. I don't do that very often, but every once in a while, I gotta be the responsible party in the room sometimes and remind you that this big news is nothing to mess with. Now, can we get on with this now, Joe? Crude oil is bearish this evening. On to the charts. But after a triple measured move, we see a channel overshoot, which is going to give the bulls a chance to grab control and start hunting for the highs again tomorrow. The bear channel tells us that sellers will keep trying to sell the highs, sell prior resistance swings, and the sellers are going to keep trying to retest the lows. But the overshoot of that channel low was immediately bought up by the bulls right here. See how that overshoot was immediately bought up by the bulls? Big ding, 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 ding. Big, big clue. That is a very big clue that we should expect, right? It's a very strong indication that a correction is likely in the near term. It may not go all the way back to the high, right? But we do expect a correction. We see something like that. The combination of the triple measured move, the double down, right? You can see right on top of each other. That tells us this is a very serious area of support, and the prior measured move at 44.80 will be an area of resistance overhead. Sellers will be looking for buyers to fail at overhead resistance levels, and buyers will be looking for the next pullback to hold for the signal that they can rely on buying pullbacks back up to resistance levels overhead. Ultimately, right now, we have three simple clues on the chart right now. Upper left-hand corner. First of all, we have a bear channel. This bear channel, like I said before, this bear channel under any other situation would tell me, right? Well, it still does. It really still does. We'll see gold. Gold's a much better example of this. The bear channel tells us we want to be a seller at the high. We want to sell resistance, right? So that bear channel tells me that we're going to be looking for selling opportunities at the highs and at resistance levels overhead. But that bear channel also shows me an overshoot. Now, an overshoot is not necessarily that big of a clue because we oftentimes see in strong bear markets like this where an overshoot will just immediately be sold right back down again. So it's not that big of a deal. But when they held the low of that channel as support, and you can see the strength of that green candle, right? And then the sellers immediately try to sell it. Now they're getting stopped out. All the sellers right now are getting stopped out of the high of that channel. So this tells us right now, when you combine all these together, triple measured move down, 1, 2, 3. It's also a double down. That's a serious area of support. Combine that with the overshoot, but again, the overshoot that then held at the low as support, we can expect to definitely see a correction higher here. Now, we also have another bear channel coming down. We call this a pending bear channel. This is one of those untested bear channels where we only have 3 points. I talk about this in my intermediate course. My intermediate course kind of builds that foundation of technical analysis knowledge. And we need 4 points to form a real good channel, right? And so, of course, the fourth point will be all the way back up here. Now, it's tough to say how strong that level of resistance is going to be because by the time we get there, we're most likely going to be already bullish. So all we know is right now, that's resistance. If we see a bullish reaction through it for a breakout pullback, that's how the buyers want to treat it, right? Turn it into support. If we see a attempt for the buyers to hold that pullback and it fails, now this becomes an excellent opportunity for the bears to sell the high of this pending bear channel. So just be aware of that high up top. It's going to be resistance. Buyers, you guys want to get through it, break out, pull back, and go, right? Whereas the sellers want to see you buyers fail so they can sell right back down. Again, we have some important news tomorrow, so it's a little bit difficult to anticipate exactly what that situation is going to look like in real time. Now, in my opinion, this little bull channel is going to be the most important information right now. Okay, what do the buyers want to see? The buyers want to use this bull channel to buy the low, take profit of the high, buy the low, take profit of the high, right? The buyers want to see this channel. And it also means that buyers can use prior swings for traps. Okay, so now look at this bull channel. Find those areas of support. Okay, buyers can look for traps. Buyers want to basically buy the low of that channel. They can buy prior support using bear traps, right? Seller failures. What do the bears want to see? The bears need to be very careful right now because the bears have there's a bunch of support here and that rising support right here. So here's what the bears want to see. The bears need to see this price break down, pull back, and hold below that channel. Okay, but here's the problem. They got that measured move and a double down right there. So it's going to be a little bit of a challenge here for those bears. The bears are going to have to get through that rising support, and you're going to see a good example in the S&P for this in a moment. But they're also going to have to stay below that 44.20. So right now, bulls, you guys want to see this thing hold the pullback. If we hold the pullback, you're going to target at 44.80. Targets back overhead, and again, that next area of resistance overhead. Don't forget, you can also see sellers fail here and buy that too, right? So buyers want to buy the low. They want to buy seller failure, right? Really, the sellers have a difficult job right now because the sellers have to get either below this support, turn it into resistance and go, and they're still selling really, really low, right? We don't want to sell low. We want to sell high. The better option for the sellers is going to be buyer failure up at areas of resistance. Failure into strength, strength into pullbacks, and then right back down, right? Buyer failure into strength, strength into pullbacks, and then right back down. All right, guys, don't forget about that major news tomorrow morning at 8:30. And come join me. We'll trade this market tomorrow morning live in real time in our trade room, and we'll do it all together. Hope you guys are having a great day out there, by the way. Let's keep going. Next up on the E-mini. S&P is bearish this evening and trading at the completion of a measured move off today's highs. The buyers haven't shown us any reason to think they want control at this point, but the sellers have a rising support trend line that they need to break before they'll want to take this price lower. So we can expect to see a trap high before the sellers take interest. The bear channel tells us that sellers will be trying to sell the highs, sell at resistance levels overhead, and keep trying to send price back to retest the lows. The buyers have the window they need to take control of this market because the measured move and rising trend line are both major levels of support. So they need to either show some strength to break down and go below that trend line, or they will wait for price to push higher so they can get short at a much cheaper price tomorrow, right? Or should I say much higher price tomorrow. Update that note there. Now, what do we have here? We got three important clues here, very similar to what we saw on crude oil. Sorry, four important clues. First one's the bear channel. Okay, little bit different than we saw on crude because we didn't get an overshoot, right? We didn't get it hold. This is a much different scenario here than we see for crude. Crude feels like you've got buyers who are interested and they're hunting, right? On the S&P, this just looks like the sellers who are still in control have completed their measured move down. They got their double bottom, and now they're just kind of going, wake me up tomorrow when we have non-farms. That's what it feels like right now. So right now, there's a lot less anticipation of the bulls. There's no reason right now to be a bull. Now, we get the measured move. We're up at the high of the channel. We have this rising support trend line. Here's a really good example. This is public enemy number one right now for those bears. The bears, just like we said on crude, the bears have to get through and hold it now as resistance on the opposite side, or else